In this video, I'm going to show you my step-by-step process of how to milk the rest of the bull market. So if you want to make as much money as possible until the bull market finishes, which will be probably in a few months, then stay tuned and let's get right into it. Okay, so how to play the rest of the cycle. Now, I think it's very important for you guys to understand where we are right now, because we can't really go into anything unless we really understand where we are in the market and what we've seen before and where we're likely to go. So I've cross-referenced a lot of the best analysts in crypto. I have a very good idea of where we're going, but obviously short-term volatility is very difficult to predict. But it's pretty clear from most metrics that we are approaching a cycle top. So everyone has to be very careful. And I got a chart up here that can show this very clearly. So we have Bitcoin. Now we made a high here. So this was the high in early 2025 when Trump launched his meme coin. And now we've made a new high. So it's, we've broken the highs multiple times down this cycle. We've had a pretty long cycle so far. Most analysts are saying that we're probably going to top between 3 and 6 months or so. But so between summer and autumn 2025. And this is good in a way because it means that if you're good at trading, there's a lot of volatility. There's going to be a lot of opportunity. So essentially, the overview is bullish short term, but the downsides increase as we go higher. And that's pretty obvious. Like the higher we go up, the further we have to fall, right? So the asymmetry is just not there for coins like Bitcoin like they were before. So you have to be very, very careful as to how you play. And we're going to get into that just now. The next most important thing, kind of layering the fundamental, is stablecoins are your secret weapon. Now, everyone knows this, or I hope everyone does at least. Like USDC and USDT are at a premium at the top of the market. So as we get closer and closer to the top, meaning that we go higher and higher, you should mentally begin valuing stablecoins as 5 to 10x more than normal tokens mentally. And this is because in the bear market, pretty much all tokens are at a discount. Right now, let me just draw a chart out so we can have an idea. Right now we have a chart and we got like a meme coin and it's like up here somewhere, right? It's up here. If it goes down, which it will in the bear market down here, if you have stable coins, you can buy down here. If you hold the coin, you're going to be down like 90%. So right now, you're holding a coin that's going to go down 90% eventually, or you can just hold stable coins and be calm and buy the bottom. So it's such an important thing. And the mental heuristic you should have is that 100K in stables in the bear market is easily plus 1 million in the next bull market. So value stable coins, like they're your friend. You don't have to ape it all in. Like keep a percentage of your portfolio in stable coins. This is what I advise everyone to do. Profit taking strategy. Now, one of the most important things of crypto is actually taking profits. So it depends what you're holding, but as we go up, you want to be gradually taking some out. We are approaching the top maybe within a few months. So the important thing with profit taking is you don't have to catch the very top. So this is just like a general map of what most coins are going to look like in crypto. So you have the kind of euphoric stage, you have the disbelief stage, the optimism stage, all of these different things. And really what you want to be doing as an investor, you want to be catching most of it. So, if we're buying here, maybe you buy like here and then you sell like here. That's perfectly fine. And that's actually a lot safer than trying to catch like the pico top. You're not going to catch the pico top. If you're trying to catch pico tops, you're going to be likely to be exit liquidity and you're going to get fucked. So you want to be catching the bulk of the move. This is very, very important. A guy I follow called Dan McAvoy, I'm in his private group. One of the things he says is you want to capture, you want to kind of exit in the final eighth of the bull market. So, the start of the bull market, you're on the first inning, which is the first eighth, and then it kind of like heats up a little bit. You're on the second, and then you're on the third. And by the time you get to like the seventh and the eighth period of the bull market, you just want to exit and you don't want to worry too much about your price. Once you see things really start to get heat up and you start to see, celebrities launching coins, Donald Trump launching a coin, all of these crazy things. If you start seeing this again, you want to just exit your bag. Even if your coin goes another 50% the next week, it's fine. It's fine because value, like I said, value stable coins more than tokens. Tokens are worthless at the top. I'll repeat that. Tokens are worthless at the top, okay? Another thing to consider is you've got to think in asymmetry. So the final stage of the bull market is when a lot of coins go fucking crazy, but you need to know when to enter them. So if you're a trader and you're listening to this, you want to focus on early narratives, early entries, and new opportunities. And you want to be entering when you have a small risk to a big reward. That's like the key. And this is how you got to think for every single trade you enter. So let's say you enter a coin and it's very pumped and it's pumped a lot in the last week. Let's say you enter a coin. It looks something like this, right? Just fucking big green candles. And you're like, oh, coins go up. I want to enter here. That's actually not a very good idea, in my opinion, because right now you're entering at a time where the downside is pretty big. Maybe it's going to pull back, consolidate, and carry on going up. You want to enter when the downside is very limited. So enter in here when the downside is probably like 30% and you can cut your losses. It's far better than entering up here when everyone's pumped. So one of my trading mentors called Tom Dante, he had a really good saying. One of his mentors said this. He said that you want to enter the market as close as possible to where you would be wrong. This is key. And you want to ingrain this in your head if you're a trader, if you can. You want to enter the market as close as possible to where you'd be wrong. So with this example here, if you entered, where would you be wrong on the trade? Well, if we entered here and we had some price support to the left, then if price gets down to here, you'd be wrong pretty close to your entry, but up here, you'd be wrong very far away from your entry. So it's not a good entry. The next thing is beware of the super cycle trap. P.S. It never happened. So I hear people talk about super cycles all the time, especially in the. I'm starting to hear people talk about it now. I'm starting to hear about Bitcoin maxis telling me that this cycle is different, that we're not going to get a bear market, that ETFs and institutional inflows have dramatically reduced the downside of Bitcoin. And I do agree with that, but it doesn't mean that we're going to go up forever. Markets are cyclical, especially right now. In the future, there may not be any more because we're going to have AI come and it's going to change the game. Markets are still cyclical. Things get overpriced, things get underpriced, and that's the same with Bitcoin. Now, I do believe that ETFs and institutional inflows have reduced the downside for Bitcoin in a bear market, but you don't want to rationalize greed with wishful thinking. You've got to be rational, understand that there will be a bear market, and you will perform better if you have this mindset. So if you have the mindset that there will be a bear market, you will perform better if you have this mindset. Exactly. So this is a load of bullshit. We're not going to get to 400K this cycle. I can tell you that right now. Okay, guys? Focus on asymmetry chains. Abstract hyper EVM. I bet you guys haven't even heard of this one. Look it up. So you will make more money if you focus on new chains as they're less crowded, more signal, and less extraction. So those who get into chains early make the most money. Those who play the game once chains have been saturated, once there's a lot of extractive individuals and very smart individuals in the game, it's harder to make money. So let me posit you this. Try and trade FX versus trying to trade meme coins. FX is fucking hard. The only edge you have in FX is that you don't have liquidity issues. You can enter in and out of any single asset class in FX. Whereas meme coins is easy because you're competing against other people that are trading meme coins, and these people don't really have much experience. So it's very important to focus on high asymmetry chains. Lifestyle inflation. Now, it's kind of less talked about in crypto because people love to flex. And don't get me wrong, I flex a little bit as well, which is some of the pictures here. You got the Lambo, you got, me on a yacht, whatever, right? This is rented, by the way. I don't own this Lambo. Full disclaimer. I don't want you guys to I don't want to be one of those annoying crypto guys that are fucking renting everything and pretending it's theirs. I don't fucking own the Lambo. I don't want to own it. I could buy a Lambo, but I don't want to buy a Lambo. So it's a liability. So I have seen this happen a lot. I've seen this happen a lot. People spend too much money and they don't prioritize stables too much. And especially if you don't have cash flow outside of crypto, and a lot of people in the space don't have cash flow outside of crypto, you want to manage your finances. You don't want to go too crazy. You want to be able to survive a bear market and have enough capital to ape heavy at the bottom. So you can do it. It just requires some patience. Mentally prepare for the bear market. I kind of said this before. So you want to mentally understand that a bear market's coming. And let me show you how this actually looks like. So if we get the chart up, and let me get one of these, a nasty bear market. Here we go. This is what it's going to look like, guys. I don't know, like this is not accurate, obviously. It could go lower, could go higher. But this is essentially what a bear market is going to look like. You're going to have a nasty decline. It's going to go from like, I don't know, what are we going to get to this cycle? Hopefully like 136. Yeah, that sounds about right. Maybe like 136 to like 60K. It doesn't sound too bad for Bitcoin, does it? Because recently Bitcoin was at 60K. Your alts will get fucked. Just on this decline here. Look at this. Just on this recent decline, it is the 31st of May. This one here. You can see that Solana has been fucked on a small decline. So you want to be very careful. And you want to make sure that you don't make this mistake. You want to always keep it in the back of your mind that a bear market's going to come. And it's healthy to have it in the back of your mind. Just accept it and play the game, okay? So, how to play the rest of the cycle. Quick recap action steps. Gradually shift to stablecoins. Value stables highly. Implement phased profit taking. Prioritize asymmetric opportunities like abstract hyper EVM meme coins. Ignore super cycle hype. Expect large drawdowns eventually. Control lifestyle inflation. Preserve stablecoin wealth. Mentally and strategically prepare for bear market opportunities. See you in the next one.